In this video, we will continue and complete the last 6 journal entries that we need. So you will recall from our general, these are all the journal entries on the general journal, and then we posted a lot of these entries on the general ledger. Okay, so now we're going to finish up. All right, so January 30th, we have more depreciation, and I told you depreciation entries, you just need to memorize this, right? So I'm going to post these two. We have depreciation for furniture and depreciation for equipment. So I'm just going to go ahead and post these two together. Whenever you have depreciation, you're going to debit the depreciation expense, and you're going to credit accumulated depreciation for the type of asset. Land is never going to have depreciation. That's the only one, but all the other plant assets will have. So depreciation expense, administrative, and accumulated depreciation equipment, and these numbers come from the amounts. So I'm going to go to my depreciation expenses in the expense section here. Here is my depreciation expense for the equipment and the furniture. So there's the two here. And then I'm going to go up to accumulated depreciation in the long-term asset section. So I have accumulated depreciation furniture and fixtures, that's going to be a credit, and I have accumulated depreciation equipment, that's going to be a credit. Okay, so those are the two amounts that I have right there. Okay, all right, now we have 4 more journal entries. So it says ABC paid monthly salary to its sales employees. Whenever you see paid, that's cash. So they paid $10,000 to its sales employees, and then it paid monthly salaries to its administrative employees. So this is basically the same entry. One is just to the sales employees, and one is to the administrative employees. And again, this is a salary expense, and we're going to do it with cash. So we'll do the first one, right? So I will look at here, right? When we have a cash is going down because I'm crediting. So the other account has to be a debit. And what is the account? The account is salary expense, in expense, salaries and wages expense, the same thing as salaries expense, that increases with a debit. So we increase an expense with a debit. Think of an expense account as tracking activity. So every time we have salary expenses or salary activity occurring, we increase the expense account. So for the first one, I'm going to have salary expense selling for $10,000, and I'm going to credit cash. I'm going to have salary expense administrative for $8,000, and I'm going to credit cash. Where does that come from? Here, right here, right? So we paid monthly salaries for the sales employees. We paid monthly salaries for the administrative employees. The sales was 10, and then the administrative was 8. So we do the exact same entry that we did. So I'm going to go down, and I'm going to post this now. Salaries expense for selling, salaries expense for administrative. So I'm going to go down to my expenses here, and here's my debit to salaries expense, selling for 10, my debit to salary expense, administrative for 8. All right, so this is for the sales employees, this is for the admin employees. And when I go up to cash, I'm going to credit for those two things, right? So here's my credit for the sales, here's my credit for the administrative employees. Okay, we have 2 more. ABC paid income taxes with cash. So again, I paid with cash, right? What's going to happen? Cash is going down, so I'm going to credit. Income tax is an expense, income tax expense, and so our income tax expense, that is going to be debited because it's going up. So I'm going to come here, I'm going to debit income tax expense for $2,500. I'm going to credit cash for $2,500. So I'm going to go down to my expenses, and here is income tax expense, which is a debit for $2,500. I'm going to come up to my cash, and I'm going to credit it for $2,500. So the biggest sort of inconvenience is having to scroll back and forth to find stuff. Okay, and then the last item I have is you pay cash dividends. Again, that's cash, right? So I'm going to credit cash because cash is going down. Dividends, I'm going to debit because it's going up. When you pay dividends, you increase dividends. Okay, so I'm going to debit dividends and credit cash. The normal balance for dividends is a debit. All right, so now I'm going to go down to dividends. Dividends is in the equity sections. Dividends is not an expense, and I'm going to debit dividends. And then I am going to credit cash up here, which is 26,000. Okay, so now I have completed all of these journal entries. I have taken all of these journal entries, the 15 journal entries or so, and I have recorded it on the general journal, steps 1 to 2 of the accounting cycle, and I have recorded it on the general ledger. So I've done steps 1, steps 2, and I'm almost finished 3. I'm going to show you the last piece of 3, but these are the 3 steps that I have here, right? So now I have all of these are recorded, and now I have the general ledger. So what's the next step? Well, the next step is to add the balances, and I'm going to use my shortcut here to get the balances that you don't have. I took it out because I didn't want to, so I'm going to just do that. Okay, so here you'll see the balances for this account. So in cash, you've got a whole bunch of debits and you've got a whole bunch of credits. So you add up all the debits and minus all the credits and you get the balance. The balance should always be on the normal balance side. So when you look at this, the T accounts, anything that's an asset is going to be on the normal balance side except for contra assets, which is going to be on the opposite side, right? So here, my cash balance is $412,900. My prepaid insurance balance is $3,600. My prepaid rent is $12. My accounts receivable is $20. If you have 2 items, one on the debit side and one on the credit side, you take the difference and the balance goes on the side that has more. So if there's more debits than credits, then the debits consume all the credits and the balance is on the debit side. And that should always be the normal balance side. And you do this, anything that doesn't have any activity, like inventory, doesn't have any activity, we're going to get to inventory later, so you just leave it blank. So office supplies, there's 2 debits, you add them up, okay? If there's only 1 balance, you just bring the balance down, like these accounts, okay? On most of these accounts, it's just going to be 1 balance, so you just bring it down. Here, you have 2 balances on the same side, you add them together. If it's 2 items on different sides, then you subtract or take the difference. And so after you finish step 3, you're going to have every account that has transactions is going to have a balance either on the debit side or the credit side. And then once you're finished that, you'll see here common stock, dividends, right? Once you're finished that, sales, service revenue, here's the balance on the credit side. Once you do that, you have these balances, then you're ready for the final step. So basically, when you get to step 3, you should have the T account filled out, and every T account, there should be 1 number, either a balance on the debit side or the credit side. The mistake some people make is they have 2 numbers at the balance. You can't have 2 numbers. You just need to have 1, either a debit balance or a credit balance. All right? So that is steps 1, 2, and 3 of the accounting cycle. In the next video, we're going to go over step 4.